Welcome to WealthMills Securities Weekly Market Wrap. What a phenomenal recovery we are witnessing in the market. At one hand, people were apprehensive because of the rapid spread of COVID-19 cases across the globe, and it is very unprecedented and very unusual. But while coming to the stock markets are concerned, markets are recovering, and everybody were in the beginning, people were in apprehension that there is not going to be any recovery. If the recovery comes, it's going to be a U-shaped or W-shaped kind of recovery. But Mr. Market is beyond the human comprehension. Market is witnessing a sharp recovery, and it's not only in India, it's across the globe. Markets are witnessing a sharp recovery. And to my surprise, the Friday rally in the market, the recovery in the market is it is a broad-based recovery. The recovery witnessed among the mid, small cap and large cap. Even some small cap stocks, there were no sellers to buy those kind of stocks. So after hitting a rock bottom, investors want to buy at the bottom prices. But what is prompting in the market? What is leading the stock markets to witness such a sharp recovery? And one thesis is, I'll come to that point before concluding. What led the markets to witness a sharp recovery? First thing is the number of COVID cases in Europe, where the major scare came in the market at the initial stage, the Spain, Italy, and majority of the European nations. The active number of cases are stabilizing, and the new intake of the patients have drastically came down. And also the news reports that are confirming currently, Sweden, the lockdown has been completely eased. Spain and Italy and some other European nations are considering to ease the lockdown in the days to come. In few weeks or few days, they're going to ease the lockdown in these economies. And also, while coming to India, last week, Indian government announced the lockdown to extend it till 3rd May. But in the interim, Indian government have given a guidance opening up some essential sectors, essential commodities. There are specific guidelines that have given to the industry, and they notified some primary and essential sectors that are going to open on 20th of April. So altogether, at the ground level, there is things are not improved. But if you see the stock market is running ahead. So what's causing this? Normally people have a tendency to think to differentiate the stock market and the economy, but they don't synchronize sometimes. Sometimes the economy might be lagging, but whereas the stock market is going ahead of the economy, they don't move always hand in hand. They always have a tendency. Sometimes the economy might move ahead, which is predominantly happens in a very odd cases, very rare cases. But most of the time, the stock markets go ahead of the economy, and that's the reason. Stock markets always trades in price earning multiples and forward earnings. Coming to Indian markets are concerned, the first thing is, as per the International Monetary Fund reports, IMF reports, the GDP growth for the current year is going to be a negative. It's going to be a negative number. That's the bad news. But the good news is, as per the projections of the IMF, they are predicting and they are projecting the Indian GDP number to be around 7% in 2021, which is a very swift recovery as per the economy is concerned. If the GDP earnings goes to 6.6%, 7% range, the earnings of the companies are expected to go up in the days to come. This is the one of the positive point coming to the Indian economy is concerned. Whereas as per the projections of IMF is concerned, the global growth will subdued, but the emerging markets, countries like India, they're going to be much ahead of the in terms of the GDP growth is concerned. This is one positive factor that is making Indian market as attractive at current moment. And also one other case is, once this COVID-19 pandemic erupted across the globe, this time the policymakers across the globe, they don't want to wait, because the 2008 financial crisis it is still there in their memory. They don't want to see one more collapse of the financial markets, collapse of the economies. They don't want to happen again in just a short span of 10 years. So the policymakers and the governments across the globe, rather than going reactively, this time they are acting proactively. They nearly pumped in nearly across the globe, starting from United States, in European nations, Japan, every nation, nearly they pumped in nearly more than $3 trillion of money has been pumped into the economy as a stimulus packages. In India, the government has pumped in nearly $23 billion of money as a stimulus package into the economy. And I was checking to some of the people, they're depositing. Of course, it's very less, it seems to be. There are rural public, they are getting next 3 months, they are getting every month 500 rupees as a cash into their economy. So the flow of money has been, of course, it is very little, but something is better than nothing during this phase. When the money is getting pumped into the economy. The same thing is happening across the globe. And as per Indian economy is concerned, the government of India is considering one more stimulus package. This package exclusively to the industry. Till now, whatever be the stimulus package the government of India announced is towards the essential services, essential and the bottom of the pyramid of the economy. Now the second leg of stimulus comes towards for the industry. So the company for the different sectors and different industries in the days to come. So we are just waiting for a stimulus package towards the companies. So what is the quantum and what kind of package that's going to announced by the government? We need to wait and watch. It is not the matter to discuss what quantum it's going to come, but the market anticipation is, as per the confirmed information, there is going to be a considerable economic package that's going to come to the industry is concerned. That's why Indian markets are showing that despite of the number of COVID-19 cases going up across India, but market is responding in a positive way. And also the news confirms what we get in United States also. If required, they will go for one more round of stimulus package. And the other thing is, if needed, okay, there are some amount of ammunition with the central banks, with the governments across the globe. They can go for quantitative easing and they can announce bailouts if needed. So we need to wait and watch how the things are going to emerge over a period of time, and how the positive number of cases are going to come up in United States. Altogether, governments across the globe, the point I'm trying to bring to all our investors' notice is, governments across the globe, they are very proactive this time. They don't want to see one more financial crisis to happen across the globe. It is the current mandate of each government. And coming to India especially, people have many doubts, okay, as per the Indian administration is concerned. People have if I interact with any foreign fund manager who are investing in India, or a FDI who are investing in India, or a global investment guru, if the primary view on India is India's bureaucracy. It's very tough, and it is very difficult to observe the policy making in India. But at present, the Indian administration is doing extremely well. There is a greater coordination, and the entire governments across the globe, they are applauding India, they are praising India to making the numbers for taking the prompt steps to control and minimize the COVID-19 cases, the number of positive cases in India, which shows a value add for the Indian administration is concerned at present across the states. Every state government, every chief minister are doing brilliantly in India. So the next leg of information what we can gain, this is a long-term perspective. Many investors who are currently producing or who want to increase their capacities in China, they want to move to some other economies. It can be India, Vietnam, Bangladesh, Thailand, Malaysia. These are the places they are exploring. If Indian administration is proactive, they could take this opportunity, and there will be a good amount of investments. The FDI investments, they may come to India where it can create employment in the days to come. Currently, the ball is in the government courts. How it's going to happen, we need to wait and see. And one of the things we need to think in India is, while most of the retail investors were apprehensive, there was an apprehension to them to invest last 1 month, but you are going to see the data on the screen. The DIS, the domestic institutional investors, it can be funds, mutual funds, or India-led funds. They are the net investors every day starting from April till date. So this is a long only money they are investing. This is not a hard money which is going to stay for some time. This money, by and large, it's going to stay for much longer time in the markets. The question is currently, there might be a sharp fall or not. Everybody waiting for a sharp fall, because one sharp fall came and there is a immediate recovery in the market. Very less people participated in the. So now the mood is when the next sharp fall will come. This is $1 million question. So I am not here to time the market when the fall. Of course, there can be a probability if the COVID-19 cases are not controllable, and if they are going to be out of the hand, then there might, but we don't expect that. Don't expect that, because we want to see the people to be healthy, and the number of, by the grace of God, the number of positive cases should come down. I am not a pharmacist, or I am not a medical doctor to predict all these things, but expect the cases get be with the optimistic view. The cases get controlled, and we see the production cycle to come to normalcy in the days to come. The point I'm trying to emphasize to our investors: the best investors in the world have more edge in psychology than in finance. So sometimes we might be thinking about more of the balance sheets and valuations, but sometimes the psychology of the investor, the investment behavior of the investors plays a vital role these kind of moments. I just want to bring to your notice, you might be reading a lot of stuff, because right now we are in a digital age. There is a lot of content is coming. I also read a lot of stuff, but I want to bring to your notice, there are many neocon investors or neocon analysts are employed across the research institutions. They are masters in finance, great, but to be successful in stock markets, it's not only the masters in finance. one of the thing, the greatest investors across the globe, they know the finance, but they're very good in history. If you ask any the people who came from a allied business school, okay, they don't know the history of last 200 years of the world history, how the markets behaved during these kind of pandemic periods and during war times. And the geography, understanding the geography of the world is very important. If you check the academics, if you check the most of these analysts who write the report, they never know what is geography, how the Latin American countries do, what are the producers of the world, who are the manufacturers of the world. What they know is just knowing the finance. So try to have an overall view on the market, know about the finance, know about the geography, know about psychology. Sometimes the philosophy also makes a difference. The best of the fund managers, the greatest investors, they are very good in psychology and philosophy and geography and history than finance. So as at WealthMills Securities, as a wealth creators, we want to see the entire spectrum of investment for our investors. And also coming to the point, for the portfolios, most of the stocks have been rising. So think for long term, invest in value and growth companies to create wealth. Thank you.